The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
All right, hello and welcome to The Trade. Before we get into the charts, let's have a look at what traders are watching out there. The Federal Reserve holding interest rates steady, saying though the risks of higher inflation and unemployment have risen, further clouding the US economic outlook. President Trump says China initiated upcoming senior level trade talks between the two countries and said he wasn't willing to cut US tariffs on Chinese goods to get Beijing to the negotiating table. The Bank of Japan minutes showing policy makers divided in March over how soon the central bank should raise interest rates. And Pakistan vowing to retaliate after India hit it with missiles on Wednesday, saying it shot down 5 Indian aircraft. India says it struck, quote, terrorist strikes in Pakistan. Let's get across the technicals though. Peter Pan from AC Securities joining me. Let's have a look in terms of, I guess, what we've been seeing, Peter, with the dollar-gold relationship.
Yeah. So recent price trend shows that the gold is moving almost perfectly opposite to the US dollar. So when the dollar goes down, the gold price goes up. And that's exactly what is happening lately. Other facts like the tension between India and Pakistan and Israel's military action also plays a role. But really, if we want to understand where the gold is headed, we have to focus on the dollar side. So lately, because the market has been losing trust in Trump's policy, money has been flowing out of the United States. That's why we have seen both the US dollar and the US stock falls at the same time. Most of those hot money went to two places: the China-related asset and gold. So last Friday, when China sent out the positive signal about trade talks, the Chinese yuan and Hong Kong dollar all jumped sharply. That made the dollar weaker and at the same time pushed even more money into gold, drives the gold price moving higher. But yesterday morning, China has announced new stimulus measures, a rate cut and reserve ratio cut, but maybe because the market expect more, so the Asia currency dropped together, and at the same time, the Federal Reserve Paul made some hawkish comments, which both help the dollar goes up, which give pressure on gold price. So let's take a quick look at the gold chart. Since April 22, the gold has shown signs of a downtrend. There is a few reasons about this but the main reason behind that is that the Trump stance on tariff has been softened. Maybe because of the Treasury Secretary Bessent's influence or internal party pressure, we don't know. But no matter the reason, the result is clear. Gold price is falling and the dollar rising means the money is going back to United States. So the big rally we've seen early this week mostly comes from Chinese trade talk news, but this attract short-term money into Asia. But since China's economy fundamentals are still weak, the inflow, I don't think the inflow will last for long. So if the talk doesn't go well this weekend, the dollar will keep rising and the gold price may drop further. So in terms of trading strategy, there is a breakout and sell situation. Right now, gold is testing a key resistance level around 3,365. If it breaks down from there, it could be a short opportunity. But keep in mind, the 100-day moving day average is still trending up, so the odds of winning on a short side are still low. Even though the potential reward is high, so you will need to set up a stop loss at around 3,400 level, and the support around around there is 3,300 at Fibonacci retracement zone. If it further drops down below 3,270, that will be another chance to short further.
Okay, and what are we seeing then in terms of the overall currency moves? Because of course the PBOC really moving to stimulate the economy. We know that there are going to be talks between the US and China in Switzerland this weekend. What is the dollar-yuan telling us?
So the dollar-yuan is falling recently. The biggest reason, as we have already mentioned before, is because of the news of a trade talk. Chinese yuan is not moving. It is moving a lot, but the biggest movement happens in the new Taiwan dollar, which jumps to 10% in just 2 days. But the fundamentals of Chinese economy hasn't really been improved. For example, the latest second-hand home sales data still shows that Chinese are the real estate prices problem has been solved yet. Plus, this weekend, U.S. and China talk. I don't think it will be likely with end with a new real breakthrough. So both sides are taking tough stance. So we may still looking forward a dollar yuan to goes up for further. So look at the chart. The dollar yuan has likely formed a bottom. If it breaks through the key neckline at 7.227, there is a great chance it will keep going up. However, there is still a downside trend line acting as resistance. This trend line reflects how the market is still trying to stay away from Trump policy driven market. So it won't be easier for the dollar yuan to break through. In short term, our target is still rely on 7.26, but if the US and China talk going badly, or Trump makes progress in other negotiation with other country, that could push the dollar going even higher, which make dollar yuan to break through past 7.26 and headed to 7.3 and further.
Now, we know, Peter, that our dollar, very much a proxy of what's happening in any kind of trade war between the US and China, had a really good spike on China's stimulus announcement yesterday. Where do you see the Aussie move now?
So the logic behind dollar yuan also applies to Australian dollar. In fact, Aussie dollar is often more influenced by Chinese economy than Australia itself. Whenever Chinese stock market drops, like just like yesterday, Australian dollar tends to fall even more than the yuan. So since Chinese economy is still weak and US-China stock may not going well, Aussie dollar probably won't perform well, just like yuan. Looking at the chart, Aussie dollar has already break below the neckline at 0.644, forming a clear double top reversal pattern. Right now, it is trending with a previous consolidating box. So the short-term strategy is still sell on the rallies. So resistance is around 0.644, while the support is at the lower end of the box near 0.635. So Aussie dollar is more likely to break a key level than yuan. So if it breaks below 0.635, it could go further, falling further to 0.627.
All right, and finally, let's have a quick look at oil. What's that telling us, Peter?
At this moment, almost all global assets are being influenced by the US-China's trade talk, but except for crude oil. The oil price are more driven by the supplier expectation right now. With tariffs hurting the demand, outlooks for consumption keeps weakening. Meanwhile, the US is rapidly increasing the production, which has made OPEC and those countries like Saudi Arabia very nervous. They have shifted their strategy from protecting the price to protecting their market share. That's why OPEC started to raise output in April and expecting to boost the production even more in May. And Saudi Arabia has openly to increase the supply by themselves. So in this kind of environment, oil prices are more likely to fall than rise. But the only upside may comes from like strong U.S. economy data or U.S. sanctions on Iran. But overall, there is not much room to go up. Look at the chart. Even though prices are bouncing back, the overall trend is downward. It is forming a triangle pattern downside. So the strategy should be selling on the rallies. Because of the uncertainty around the sanctions, resistance level we are watching are $60 and $65. So these two areas are good price to enter in short position. The first support line is $55. If that breaks, we could also see the crude oil price to head more downward and towards around $50 level.
All right, Peter, always a pleasure. Thank you so much. Peter Pan from AC Securities with all the technicals you need to know today. That does it for this edition of The Trade. Be sure to join us next time.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au. The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.